Norway, a small country located in northern Europe with a population of around 5.4 million people. Together with Sweden and Denmark, it forms Scandinavia, home of the historical Vikings. Previously known for pillaging and raiding other civilizations in the past, it is now, funnily enough, known for one of the most relaxed, enclosed and trustworthy humans in the world. Despite its small size, Norway has a highly developed and to some degree a diversified economy. The country is known for its natural resources, including oil and gas, fish, and hydropower. Having a strong welfare system that appeals to well-educated laborers has over the years resulted in a highly educated workforce that benefits the growth and further development of the country. What Norway is most known for today is its oil and gas industry, which is one of the largest in the world. The country is a significant producer of crude oil, natural gas, and natural gas liquids. This industry is a major contributor to Norway's economy, accounting for about 40% of its export revenue and 20% of its GDP. The Norwegian government has established a robust regulatory framework to manage the industry, including strict environmental regulations and a tax system that encourages investment in exploration and production. Despite the global transition towards renewable energy sources, oil and gas will continue to play a significant role in meeting global energy demands for the foreseeable future. The Norwegian oil and gas industry has a strong track record of stability and reliability, which can make it an even more attractive investment option compared to other, riskier industries. After several years of lower oil prices and challenging market conditions, the Norwegian oil and gas industry is starting to recover. Many oil and gas companies in Norway are currently trading at attractive valuations, which can provide investors with opportunities for growth. Some of these are Equinor, Aker BP and Vår Energi. From an investment standpoint, Equinor stands apart from Aker BP and Vår Energi in terms of responsibility, as they are one of the three largest companies in Scandinavia, which means that the general population expect them to contribute more in the conversion to greener energy. As we all know, there is an increasing emphasis on global green energy and CO2 neutrality. Therefore, Equinor's investments are more tilted towards ESG considerations, making it a more diversified asset compared to the other two companies, and not just a pure oil and gas play. With this kind of pressure, however, the company may jump more into bad acquisitions because of the need to penetrate the ESG market. Moreover, Norway as a country has also invested a lot in renewable energy sources, ranging from clean energy generated from wind, hydropower and tidal power being some of these. Interestingly, the number of electrical cars sold in Norway, in 2022, were a staggering 80% of every new car being bought. This tells you how important the energy transition is considered by the Norwegian government, incentivized by taxes. Some of these taxes are: no purchase import tax on EVs, exemption from 25% VAT on purchase, no annual road tax, 20% reduced company car tax. The diversification towards greener energy can help to future-proof the industry and reduce its reliance on traditional oil and gas production. Investors who are interested in sustainable and socially responsible investing may find this aspect of the Norwegian oil and gas industry particularly appealing. Companies that may be of interest to check out can be Subsea 7, Scatec Solar, Statkraft, Ocean Sun, Aker Offshore Wind and Nel. These companies have their head focused mainly on the green market transition and can benefit greatly if the Norwegian government want to incentivize the sector, as they tend to do. A big benefit being exposed to the Norwegian markets is that it has a stable and predictable political environment, which can help to reduce risks for investors. The government has historically been supportive of the oil and gas industry, and therefore implemented policies and regulations to encourage investment and growth. The Norwegians also has a well-developed infrastructure for the oil and gas industry, including pipelines, refineries, and export terminals. This infrastructure can help to ensure that the industry is able to operate efficiently and profitably, which can benefit investors greatly in the aspect that it can keep the cost down, compared to market rivals. Aker BP is for example known to have a break-even profit margin when the oil price is in the region of $25 to $30. Comparably, and before the oil market crash in 2015, the typical break-even profit margin for oil companies lied in the range of $60 to $80. Another industry worth diving into is fishing. Fishing has been an important industry in Norway for centuries, known for its long coastline and rich fishing grounds that support a variety of fish species. Norway is one of the largest exporters of seafood in the world, with fish and seafood accounting for about 8% of its total exports. The fishing industry is highly regulated to ensure the sustainability of fish stocks and to be able to protect the marine environment. The global demand for fish and seafood products is expected to continue to grow in the coming years, driven by increasing population, rising incomes, and changing consumer preferences. The Norwegian fish industry is well positioned to capitalize on this trend, as it is known for producing high-quality and sustainably sourced fish and seafood products. An interesting fact is that the salmon sushi actually is a Norwegian invention. The Japanese did not eat raw salmon, until the Norwegian fisheries minister together with seafood exporters introduced the idea. The global fish and seafood market is relatively stable and predictable, with prices for many species remaining relatively constant over time. This can provide investors with a reliable and steady stream of income, which can be particularly appealing in uncertain economic conditions. Also, the Norwegian fish industry has a strong focus on sustainability, with strict regulations and guidelines in place to ensure that fish and seafood are harvested in a responsible and sustainable manner. This can help to reduce the industry's impact on the environment, and may make it more attractive to investors who are interested in socially responsible investing. It is worth noting that the fish industry also involves certain risks. For example, impact of shifting market conditions and environmental factors, or natural sea life being affected by the world's emissions. Therefore, investors should conduct thorough research and consider these risks before making any investment decisions. It's worth noting that the Norwegian government recently have increased the tax scheme for the fishing industry, due to the revenue stream from the natural resources, being every Norwegian's ownership, which is the argument at least. This has resulted in many investors neglecting the industry because of the increased political risk. However, it's important to view this as a potential, one-off case, rather than an occasional occurrence. Interesting companies that may be of interest to check out, and priced in favorable prices are Mowi, SalMar and Leroy Seafood. To sum up, the Norwegian fish industry presents a compelling investment opportunity in 2023, thanks to factors such as robust and rising demand, favorable market conditions, eco-friendly practices, cutting-edge technology, and a reliable infrastructure and distribution system. However, it's crucial to acknowledge that investing in both the Norwegian oil and gas industry, as well as the fishing industry, comes with inherent risks, especially as the world shifts towards renewable energy sources. Good investing. Make sure to check out our next video, where we dig into the Norwegian krone currency.